Hi everyone, welcome to our third episode of Rumba Toga. That would be in English. How can I translate that, Karen?
You could just say rumba tu, I feel like.
Yeah, it would be like all the way.
Rumba.
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 So we are so happy we have our special guest. That is Jonathan Ellis, more than 20 years in the lending industry, mortgage industry, preferred lender for a lot of builders, realtors. So we're so happy to have you today.
Thank you for
accepting and being with us. So I would like to introduce, but it would be better if you talk a little bit about yourself. What do you do? Who you are? How many years do you have doing this?
Well, I'll introduce myself. I'm Jonathan Ellis. I've actually been in the industry a little over 20 years. So a long time.
A lot.
Long
2
time.
decades.
Yeah, so
Wow.
I've seen all the ups and downs, the lefts, the rights, all you name it.
Interesting fact about Jonathan Ellis, even though he only speaks English and very few words in Spanish, about how much of a percentage of 100 would you say is Hispanic Latinos loans that you're doing?
I would probably say close to 90%.
Yeah.
I agree, yeah.
And the people text you in Spanish and
They
call
do.
you in Spanish.
And we have some Google Translate.
But your team speaks Spanish.
That is correct.
Yeah.
And it's great because you're helping a lot of people. We were talking about that the other day that we did the other episode, helping people that think that probably they were never going to get a house.
Right.
And, you're helping them even though they don't have the best credit, they don't have the best income, but you're like always there,
Right.
supporting and helping them to make their dream, come true, that is getting a house.
A lot of people think that you have at least 20% down to purchase a home. That's completely false.
Why would you say that's false?
Because we have, we've got programs that require zero money down, depending on if you qualify. Do you have to have the best credit in the world for that program? No. We go all the way down to a 600 credit score if need be. Okay. So there are other aspects and other things that go into what we can approve them for and what we're going to look at. But we do have those products available for people to cover their down
So let's
payments.
talk a little bit about that, like the
Okay.
DPA, that is one of the most famous programs now.
DPA is down payment assistance.
Yeah.
Mhm.
So if you can explain a little bit, like what do the people need to send you in order to see if they qualify, like basic information,
Right.
how is the program, like how does it work, and a little bit of the down payment
So
assistance.
I would say probably our best program right now, our down payment assistance program is probably going to be with NC Housing.
Yeah.
They offer $15,000 right now towards your down payment. Okay, now you do have to be a first time home buyer, but most people looking into these programs and products are first time home buyers. Now, that as far as documentation and stuff we're going to need, NC Housing is going to want to see, they're going to go off of program guidelines.
Yeah.
Right? So if we're doing an FHA loan, as long as we're fitting within the FHA parameters, NC Housing is going to be okay with it.
Yeah.
Okay. Now they're going to have to sign off on it, review the income. There are income restrictions, debt to income restrictions, etc.
Yeah.
But when it comes down to it, $15,000 can cover their entire down payment and their closing costs as well. So.
Yeah, that's great, because something that is special that probably we know, but the people don't know, sometimes the people buy a house and they think they only need to pay the down payment.
Right.
They
That's
say
always-
like, oh, it's only a down payment, but I need to pay closing costs. Like, if you can explain what are the closing costs? What do the people pay in closing costs? Because sometimes
They
it happens
think that
very
it's
often,
just
the
the down payment, and they think that they don't have to pay
No, you
anything
need to
else.
pay down payment and closing costs.
Right.
What are the
So,
closing costs?
so closing costs are going to consist of, lender fees. Okay. We do charge an application fee and a commitment fee and an origination fee on those particular loans. Okay. The reason we charge the origination fee is because the servicing on those loans, we don't receive the servicing that we would on our standard conventional or an FHA loan, because it is a state agency product. Okay. So the fees are a little bit more on those particular programs, but you have the $15,000.
Yeah, so it covers.
To cover that.
Yeah,
Correct.
a good part, and they're still getting a huge,
Right.
It's
like
still an assistance, that's what it is,
Yeah,
it's an assistance so that
assistance.
you don't have to keep waiting or prolonging in order to buy. What would you say is, I guess when people are like, no, I'll just wait for the interest to go down. What would
Yeah,
you
that's a
say is
good
a
question.
problem
Okay.
then when the interest does
What
go
happens,
down?
yeah.
When it
So-
goes down, right?
Right. So
if
interest.
it does.
If
But I do this because
Yeah.
everybody right now is saying that this is high. What would you say to someone who says that the interest rate is high right now?
I would say historically, go look at interest rates.
Yeah.
Right, over the years. Back in the 80s, we were at 13%.
Yeah.
Double digits. So now, of course, home prices were a lot lower then.
Yeah.
But when you look at historically where we are interest rate wise, we're still in a very good spot.
Of
Okay.
course.
Now with the people that are waiting and sitting on the sidelines and waiting for interest rates to come down, the thing about this market is home prices are not going to be going down. I mean, they may slightly go down slightly, but you're not going to see a huge decrease in home values. You know, so if people are going to wait on the sidelines and, you know, we see a 1% drop in rates,
Yeah.
you know, like I said, you know, I heard a statistic the other day that, you know, for every percentage drop in interest rates brings another $5 million or 5 million people back into the market.
Really?
More competition.
Wow, yeah.
So it's more competition, so yeah, you may be getting a lower rate, but you're gonna have to offer above asking price to compete with the other
Yeah.
people that are asking, you know, that are offering these houses, so.
Yeah, that's the thing that sometimes, and you know, something happened also with a friend of mine that he was telling me, no, I was waiting for the interest rate like to come down like 2 years ago. And the other thing is that like the income, usually the people maintain like the same income, like it doesn't go up.
It doesn't go up, yeah.
So if you qualify today for a house that is like 500,000, probably tomorrow you don't even qualify for a townhome.
Yeah.
So that's the other thing, you know, they keep waiting.
There's
And he said, oh my
there's
God,
pros and cons to both
yeah,
sides.
I wanted to buy, you know, my house, but now I can't, you know, even buy a townhome.
Yeah.
I should have bought my house 2 years ago.
So if you're looking at where rates were 2-3 years ago, if you're saying, you know, just say 3.25%, 3.5% wherever we were,
Yeah.
where rates are now, it's diminished about $200,000 in purchasing power for people.
You know, when I first moved to North Carolina, I used to look at areas where I'm looking at now. And I, you know, like everybody else, like many people do, they go and they look at houses, they're saving them and stuff like that. When I go back into the application now, 3 years ago, up until today, the house value has doubled.
Mhm.
At least here in North Carolina, so I have not, I'm like, oh my goodness.
Yes.
I should have bought 3 years ago.
It's like the
But it's
same
always gonna
because-
be like that. It's always gonna be
Yeah.
like, I should have bought before. Why did I
So
wait?
the people that don't buy today are gonna say, oh my God, in 1 year or 2 years, they're gonna say, I should have bought, you know, 2 years ago.
Yeah.
So it's gonna be the same thing. Let's talk a little bit now about the MCC, that's another program that you have. If we can like.
I did want to touch on one other thing with interest rates, you know,
Oh, yeah.
rates
Oh,
are,
yeah.
rates
Go
are
ahead.
higher right now, but of course, obviously, you know, we can look at refinancing people, okay? And most of the people,
Yes.
most of the people I'm telling right now that these loans we're putting them in, they're purchasing is not a permanent loan for them.
What's
okay?
that beautiful quote you always like to tell me about dating and marrying? What is it?
Oh, it's marry the house, date your rate.
There's another program that Jonathan offers, and something special that I wanna say is that not all of the lenders know how to work with these special and particular programs.
Yes.
So, it's very important to mention that because I know, you know, sometimes you're looking for different options and they don't even know that the programs exist. So, what is the MCC? How does it work? The same thing, like
So
basically how we
the
can explain it.
MCC stands for Mortgage Credit Certificate, okay? It's a
Okay.
$2,000 or up to $2,000 a year tax credit,
Okay.
This basically is, allows the buyer to reduce their taxable income by $2,000 at the end of the year, okay? So it obviously helps with more of a refund at the end of the year, but also we look at that as they can reduce their withholdings in their paycheck every month, that amount. So we actually can use that as income and it helps with people who qualify for their debt.
Yeah, that's good because sometimes the loans are very like tight, you know, and the numbers for them to get them approved.
Especially right now with interest rates where they are.
Yeah, so that would be like a good option or a great option, you know, for someone that.
The
can-
good thing is that Jonathan will find many ways to
Yeah,
be able to
yeah,
assist.
We'll
It
get very
doesn't
creative.
matter. You'll get there.
We call it creative finance.
Yeah.
We do have other down payment assistance programs as
Yeah.
well.
What's the difference? What's
So
difference between
the
them?
program we've got with Essex, which is I don't want to say it's a third party, but it's we do the loan in house, but it's an FHA loan. They'll
Yeah.
cover the full 3.5% of their down payment.
Yeah.
Okay? That program used to have income restrictions, 160% of the median income, but they actually completely removed the income requirements. So somebody can make $500,000 a year and still qualify for down payment
That's really
assistance
good, yeah.
if they needed to. So that also does not require them to be a first-time home buyer either.
So not a first time home buyer can
Correct.
still get assistance.
That is correct.
That's good.
And no income limit, right?
No income limits.
That's the great part also.
Yeah. Well, the good thing is that you're also always, the programs are also changing depending on how the economy is doing and stuff like that.
Right.
You would say, yeah.
They are, and I think that's why it's important too with who you work with to make sure they're up to date and stay up to date on those programs.
Definitely somebody who has 2 decades
Yeah.
under their belt.
Yeah.
Yeah.
Yeah, knows how to work these programs. That's good, yeah.
So,
Yeah, that's important. I'm trying to think like any other like important questions, you know, closing costs that the people didn't know much about
But they
closing
get
costs.
confused, yeah.
About the down
Programs.
payment. So, when they get a conventional loan versus an FHA, what's the difference? That's like maybe a dumb question for us, but I get that question a lot.
Yeah, yeah.
Like if I'm a first time home buyer, is it the best option to get the FHA, or why am I getting conventional, or what's the difference
Right.
between the two of them?
so it's all gonna depend on credit, basically,
Okay.
Conventional loans are driven more off a credit score, okay? You have to have a minimum 620 credit score for a conventional loan.
Yeah.
The minimum down with conventional is 3%, okay? Are you
So
gonna
For
it's
a
even
first
better.
time, for a first time home buyer.
Correct,
Okay.
but are you gonna get an approval with a 620 score with 3% down? More than likely not. So if you've got a 620 credit score, you're probably gonna be looking at least 10% down, okay?
Exactly.
If that was the issue with credit score and we were lower on that, 620 range, or
Yeah.
even all the way down to a 580, FHA is not so much credit score driven, okay? So we can go down to a 580 credit score on an FHA loan. So just depends on credit, depends on the situation, depends on what they want to put down, for what loan's gonna be better for them, because if they have a lower credit score, conventional is gonna be more driven off of credit score when it comes to their mortgage insurance as well. Alright, FHA mortgage insurance is gonna be the same regardless of the credit score.
Yeah.
Okay, now if they're putting more down, the premium will be lower, but all in all, it's a much better program for people who don't have stellar credit.
So it basically depends on, the credit, like, more than
Yes.
likely.
Mhm.
But it's always better for them to apply and check with you, an
Of
expert.
course.
Yeah, they can't just go over here making up numbers
Right.
in their brain and thinking like, what can I
Exactly.
file for? Yeah,
Unfortunately,
qualify
the
for, yeah.
mortgage industry's not really like drive time. You can't just push snap on it and, you're approved, so.
Yeah.
So, we
So
ask a
That
few
would be
questions.
different, yeah.
Yeah.
People are always asking, well, why do they need so many documents? I'm like, well, imagine you're going to loan someone money,
Mhm.
right? Would you just take their word for it? Would you check
Right.
background and
Yeah,
And
that's
we're
the
lending
only way-
hundreds of thousands of dollars.
And that's the only way of
Just
knowing
a
like
little.
the profile of each person, with the papers. Because you can say, they're paying me $1 million or whatever, but you need to see,
Mhm.
how much they're making.
Yeah.
Right, so, you could have somebody with an 800 credit score and somebody with a 600 credit score,
Yeah,
and the requirements are gonna be the exact same for both of them. Just because you have better credit than someone else doesn't mean that you're gonna have to provide less documentation.
I have a question that is very common. And it's like when the people have cash, when they have 10,000, 20,000 in cash for the down payment, or they have it, under the,
In the couch
Mattress-
cushion, the
mattress
mattress,
mattress money or whatever.
and the little coffee can.
Why can't they use that? Because they say, like Jen said, I have $50,000 in cash.
It's still
I wanna
money.
pay
Why
for
can't?
that.
Yeah.
That's funny. So
Right.
what's like the
So
particular?
the easiest way for me to explain that, I guess the reason why we ask those questions is
Yes.
to avoid money laundering.
Of
Okay.
course.
So basically what people could do is if they had $50,000 in cash, right, they could go buy a house. If we allow that, they could take that cash, could be illegal money, could be from places,
Because we
that-
can track from where it comes.
Correct.
Right, so what they could do is they could put that money into that house,
Yeah.
right, buy that house, keep it for a short period of time,
Mhm.
turn around and sell it,
And we never.
get that money back out, and then basically just wash
Watch
that money.
it, yeah.
Yeah.
Okay, so that is the reason why we ask these questions when it comes to all their deposits, okay?
Yeah.
We're not trying to be picky, we're not trying to be annoying, or
Yeah.
We're not the
anything
only
like
ones that
Right,
ask that, correct?
Right,
Yeah,
so, but
it's
there,
So all banks are
Right.
gonna ask it.
so cash, is allowed in some instances, depending on the loan program, FHA, so anything less than 1% of the purchase price, they can deposit and we won't have to source.
That's
Okay,
perfect, yeah.
so if it's a
That's
$200,000 house, anything less than $2,000 does not have to be sourced, okay? If it's a conventional loan, whatever their gross monthly income is, it's gonna be less than 50% of whatever their gross income. So if they make $3,000 a month
Yeah.
and they put in a deposit of less than $1,500,
They would be okay.
we don't have to source that as well.
That's very important.
That's good, yeah.
So that
Yeah.
people can know that they can at least, use a part.
And they can also do it over time, and, there's situations where if somebody's got cash, we will try to see if they have a family member or somebody like that that can gift them the funds,
Yeah.
you know,
Yeah, how does that work? the gifts?
So the gift, I mean, it can be, if it's FHA, it's gonna need to, come from a family member or a close friend of the family,
Yeah.
okay? So the close friend of the family's, defined as somebody that's, you've known for a very long time and whatever their relationship is.
They've seen you in your diapers.
Right.
Someone like that, yeah.
Right. So that money can actually come from a family member or a close friend of the family, as a gift, right? We just have them fill out a gift letter, we get the donor's bank statement, make sure they have the funds, and then they actually can just wire that money straight to closing. So in situations where people do have a lot of cash, we can do it as a gift from a family
Yeah,
member.
and if they don't have like the money, they can always get a gift.
Yep.
So that's an option also for the people that say, hey, I only have like $2,000 in my bank account, but I do have I don't know, my dad is gonna give me $10,000 for my closing costs or whatever, so.
Mm-hmm.
So overall, the best thing here is to be able to source the money of whatever it is that they have
Yes.
going in.
It's considered, needs to be 60 days. So they got $50,000 in cash and they think that they're gonna buy a house down the road.
It's not gonna-
They need to go ahead and put their money in the bank, right? No, I mean, seriously, and it
Right.
needs to sit there for 60 days, and that's why we'll get additional bank statements after that, and that will be
It gets
sourced.
like more like
Yeah.
complicated or something like that, yeah. So, well, I think that basically we talked a little bit about everything.
About everything that we could possibly think of right now. I mean,
Yeah.
I know that we can go into more details. This could be very long. I mean, 20
Yeah.
years of
Well,
experience.
Yes, I mean, 20 years is a long time, as you can see, that's why I have no hair.
That's
So-
because of the clients or what?
Right, that's because of the clients.
A
and
lot of
it's-
stress.
A lot of stress in this industry, so, but I've been.
I guess what's a piece of advice you would give before we let you go to carry on and closing more loans today?
Oh,
Yeah, for a loan officer, someone
Yeah,
that is
for
starting on
Maybe
the.
starting someone new, someone.
well, this is a challenging market right now.
Yes.
Okay.
Jumping into the industry as a new loan officer, trying to grow your business right now would probably be a little tough.
Yeah.
But getting involved with the right team, the right people, somebody that's gonna mentor you, somebody that's gonna train you, somebody's gonna teach you all the programs and products, not just a standard conventional loan, oh, sorry, we can't do it. No, there's, just cause it's a guideline or just cause an underwriter says something does not mean that that's right.
Yeah.
Right?
Yeah.
So, there's all kinds of ways to get creative, and that's what we do.
You're expert.
Yeah, well, and that here at Cornerstone
Expert at
too,
arguing,
our
too.
operations team and our underwriters are very good with working with us, trying to get these
Yes.
loans done, so
Yeah.
we know it's a tough market.
Yeah.
And you always close, that's the most important.
That's right.
You get the people to the closing table.
That's
Yeah.
right, as long as they do what we tell them to do.
Of course,
That's right.
yeah.
Listen to the expert advice. That's
Yeah, well, thank you so much for your time, for,
Absolutely.
sharing
Pleasure
with
being
us a
Yeah,
little bit
thank
of
you.
your experience and everything. And we'll see you guys in the next.
Next episode.
Thank you.
See you later.